Well, let's talk about big expenses are coming for companies that invest in AI, and that we know AI. That's all you hear about how great it is, but there's a story behind it. And we've talked about this in the past couple of years, and now after companies have spent roughly 500 billion, that's just in 2025. It is estimated they will spend another $3 trillion by the end of the decade. Now, as the companies spend more money on data centers, chips, and other items for AI, their depreciation expense will continue to rise each year, which will reduce their income. And this is something people don't think about. Who thinks about investing? Oh, what's the depreciation going to be? They don't think about that.
Yeah, and the way I just kind of want to break this out for people is let's just, again, look at a $100 billion capital expenditure that you depreciate over 5 years. So that would be a $20 billion expense on the income statement. Let's say you do $100 billion this year and then you do $100 billion the next year. Well, now all of a sudden your depreciation goes from 20 to 40 billion. Well, then if you do another 100 billion the following year, now it's $60 billion of expenses that are going to be there for 3 years and then it's going to start to fall off again. It can be a really dangerous path. I kind of almost look at it like these buy now, pay later things.
Yeah.
Right? Where people will stack, oh, it's only $10 a month. Oh, it's only $100 a month. And all of a sudden you stack 10 of them and you're like, oh, shoot, I got $2,000 a month.
Yeah, I can't pay my bills.
I'm kind of looking at it the same way with these depreciation expenses. It's like, oh, it's not a problem in year one. Not that bad in year two.
And
year
I think
3, it could be a big problem.
And I think you were generous with a 5-year depreciation schedule because actually I think on chips it could be a shorter time frame because technology moves so quickly that those chips in 3 years, like, no, we need to replace those chips because they're only a third as fast as the new ones coming out.
Well, but that's the issue. We've talked about this before. This is kind of a different topic, but when you look at the depreciation schedule that these companies are using, it is longer than I think it should be. So they might be depreciating, and I forget the exact numbers, but I think it is over 5 years, but the investment cycle might only be 2 to 3 years. So they might have depreciation on the books and then also need to replace those chips, so they're going to have a new depreciation schedule. I mean, it could be a big problem if they're, again, continuously having to replace this chip cycle.
Well, that kind of brings me to the next point because the big tech companies, well, they're kind of sneaky currently with depreciation. Many companies like railroads and other companies report depreciation as a standalone operating expense on the income statement. So you can see it. We look at it. Yep, there it is. But what happens with the companies is that the depreciation is important for investors to understand and is that eventually equipment will become obsolete or worn out and must be replaced. But, and this is a big but, the tech companies currently don't have to break out depreciation until 2028 after a new rule change takes effect. So it's a problem because you can't find a depreciation and you got to wait now to 2028. I mean, and 2 years away to really get some good numbers. And I don't know how the tech companies got away with this. I thought all businesses had to do it, but tech companies...
By 2028, that depreciation is going to be huge if they keep on these massive capital expenditure cycles.
Yeah.
And currently, kind of to your point, they include depreciation in the cost of goods sold or sometimes in research and development or general and administrative expenses. So it is a little bit more hidden there, which makes it very difficult for investors and analysts to understand the true numbers. The big tech companies' defense is they currently included in the footnotes. How nice of them. However, companies like Microsoft have as many as 15 to 20 footnotes, which are generally not seen by investors or analysts.
Yeah, it's just a crazy thing. And perhaps the big tech companies will continue to hold on to their lofty valuations for now. But at some point, the real earnings will come through, and the stocks, well, they're going to take a beating because, and they've already kind of started to, because it used to be they were low capital expenditures, like, oh, this is great, they have all this cash flow generating. Now all the money they're spending, they're starting to act like a real company to where maybe they won't trade at 20, 30 times earnings because, no, you got capital expenditures, you got depreciation, your earnings have fallen, you're only worth 10, maybe 15 times earnings.
Well, there used to be free cash flow machines, and now with all this capex, I mean, some of them are actually tilting towards negative free cash flow. Earnings are still positive, but free cash flow is negative because, again, the way the accounting works behind it. And the thing that I continue to claim is somebody's wrong here, right? NVIDIA is a big benefactor from all of the spending that's taking place. But if these companies continuously have to lay out $150, $200 billion a year in capital expenditures for the next 5, 10 years, they should not be trading at the multiples they are. If the capital expenditure cycle is only maybe 2 to 3 years and those NVIDIA chips are good for 5 years, well, then what happens in 2 to 3 years? Companies don't need to buy NVIDIA chips at that same degree, and then NVIDIA sales will tank. then they shouldn't be trading at these lofty valuations. So somebody is going to lose here. I just can't tell you who.
Yeah, or when is the thing. But you got to know it's going to be there. And again, I said by the end of the decade here, that's only 4 years away, $3 trillion more is going to be spent on AI. And there's still, and I think a week or two ago, we talked about how we're not really seeing the income from AI yet. So could that ever come?
Yeah, and I'll tell you that number might come down. I don't know if anything's going to happen on Monday but this is pretty big news to me. This just came up on CNBC. I had my computer pulled up. After previously boasting $1.4 trillion in infrastructure commitments, OpenAI is now telling investors that it plans to spend $600 billion by
less than half.
2030.
Wow.
Yeah, so that's a huge, huge change. And that still comes with OpenAI targeting about $280 billion in revenue in 2030. That's now just 4 years away. Right now, they reeled in $13.1 billion last year. So they really need to have this huge ramp up in revenue. They've obviously cut down that commitment level, which I think is going to hurt your Microsofts. They're a huge partner. We talked about how their backlog, I think, is like 40% OpenAI or something crazy like that. That could be a big, big blow to Microsoft long term. And if, again, OpenAI can't ramp up revenue to $280 billion, they can't commit to spending $600 billion.
Well, and also, too, as you're talking, I'm thinking that this is really going to hurt the NVIDIA, the chip makers, because, well, wait a minute, you were going to spend, you said $1.4 billion?
$1.4 trillion.
Trillion. Now it's going to be $600 billion. Well, a lot of that is in chips. And so this is where you get you keep adding and adding and adding. Eventually, the building collapses.
Yeah.
And I don't want to say that, oh, gosh, NVIDIA is going to go bankrupt.
No,
but that's not going to happen. But the thing is, eventually, it's not going to justify that high growth rate with that high PE multiple that they have.
Yeah. So I just continue to think, again, AI is just such a complicated space. It's here. It's not disappearing. Don't get me wrong. But the thing is, it's so hard to predict out what is going to happen here. And people have all their eggs in this basket, and things change. And all of a sudden, maybe a new entrant comes, or, I'm going to say maybe it is Microsoft that wins. Well, then that really hurts Alphabet, Amazon, Meta.
Yeah.
So, there is going to be a winner. I just can't tell you who.
And then where does Apple play? We don't even talk about Apple.
Oh, yeah, I got a whole load of thoughts on Apple, but I'll save that for another show.
Yeah, so